I'm Waldegrave, market analyst at Teekay, and I'm here to talk about the tanker market. Our expectation for the winter market was that rates would generally be low, but that we would see periods of short, sharp rate spikes, and that's exactly what we're seeing in December. December started off with crude tanker rates at or below break-even, but in the beginning of December we started to see rates rise, especially in the Mediterranean and the North Sea and the Baltic. And really that's due to seasonal factors. We saw some bad weather in the North Sea and the Baltic, also some weather delays in the Turkish Straits, which were at about 3 to 5 days coming into December, but increased to 10 to 12 days. And so that tightened tonnage supply in the Med and gave a boost to rates. What we've also seen in the region as well is that we've seen the resumption of Libyan crude oil exports, and that's been really important for the Med market, for both Suezmaxes and more so Aframaxes. And Libyan crude production now is running at about 800 to 850,000 barrels a day, of which they're exporting around 600,000 barrels a day. So that's a good boost for that market, and as production increases over the coming months, that will help the Mediterranean market from Aframaxes and Suezmaxes. Elsewhere, we've seen rates have been pulled up a little bit from what's happened in Europe, but not to the same extent. So the Suezmaxes out of West Africa got up to about $20,000 to $25,000 a day, but no higher than that. And our expectation for the rest of the winter is that we'll see the same again, so rates will generally be low, but at times we'll see short, sharp rate spikes. But what we're seeing is as quickly as they come up, they go down. So you've got kind of a 1-2 week window to try and take advantage of these rates. Looking into 2012 and 2013, we maintain our expectation that the markets will get more into balance by the end of 2012 and 2013 as fleet growth starts to slow. And that's taking into account steady continued oil demand growth. Of course, the one thing to watch out for there is what's happening in the global economy at the moment, particularly in Europe. And any kind of slowdown there on oil demand will cause a bit of a drag on tanker demand growth into 2012. But as I say, our expectation is still that we'll see some tightening towards the end of 12 and 13. And one thing that's going to help us there is tanker scrapping. In the last week or two, we saw some relatively young crude tankers being sold for scrap. Particularly on the VLCCs, we saw tankers as young as 15 years being sold. And that's going to be very positive in terms of getting rid of some of the older tonnage and helping to rebalance the tanker fleet. On the flip side, what we saw on the bad news was that we heard of an order for 10 Suezmaxes being placed at Rongsheng in China with an option for 10 more. Details about that order are still a bit sketchy, but we understand that it is a firm order for 10 ships. Our hope is, of course, that this is kind of a one-off and not the signal that we're going to see some counter-cyclical ordering, which will, of course, increase fleet growth going forward. But hopefully it's just a one-off event and won't hurt the tanker market when it comes into 2012 and 2013. So that's our take on the tanker market for December, and we'll speak to you again in January.